This is going to be a end of day video review for September the 8th, 2022. So a few things to point out. It was contract rollover, so all the prices were adjusted. So now we're on the December contract. One thing interesting to point out is if you look back, let me do it like this. Well, actually, I don't want to do that. We're on the December contract, and if you look back to the September contract, you'll notice that there was a midpoint of this range from the June 17th low to the August 16th high. And what's interesting now is 4,000 is the exact midpoint of this rally. So what do I mean by that? Well, if I take the low here of the 17th and the high of August the 16th, and what I'm going to do is project 50%. I'm going to put it in blue, and I'm going to label the price. And what you'll notice right here, 4,000. So 4,000 is the exact midpoint of this rally. And it's a very big, it's an important round number, if you think about it. Here's 5,000 up here, 3,000 down there. So it's very important. And it's really fascinating how the computers, they made the midpoint of this rally 4,000. So I think this is going to be a very important price level. And you can see we're literally in the middle of it. Today was a very good day for the bulls. The bulls had a decent bull bar yesterday, and the bulls got good follow through today. I thought there'd be something disappointing with this bar, and I was wrong. And this is good for the bulls. You can see the bears. The market tested yesterday's high and let those bears out. So a lot of bears who sold the high of this bar, whether or not they scaled in higher, were probably disappointed enough that they got out at the highs over here. And I'll show that on the 5-minute chart here in a minute. But overall, good day for the bulls. What do I think is going to happen? I think we're going higher. What I'm not sure of is, do we pull back first? So is the market going to pull back 50%? Something like maybe here. I mean, the market could pull back to 39.80 before it goes up. The question really is this strong enough is it always in long right now? And that I'm not sure. I think it's close. 2 bull bars closing on their highs. That is good for the bulls. At support down here. And the June 28th high, the July 7th high, as well as the July 26th low. I tend to think that the bulls need one more bar closing on its high. That would make me think the market's always in long. There's still the risk that the market is forming a top up here, maybe up here. But overall, I think this is good for the bulls, and that the market will test this close here. So let me pull up the 60-minute chart real quick. There we go. So 60-minute chart, you can see we tested this low, tight enough channel that the reason I had this line drawn here was I thought the market would get back to here and sell off a little bit. I didn't know it would sell off that much, but I did figure there were some sellers up here. Bulls, if you bought this low and scaled in lower, you're going to be disappointed enough you'll probably take profits up here, so it becomes resistance. The bulls bought thinking tight enough channel, it's support. They were wrong, and when the market went down and tested up, they're disappointed. They don't want to buy where it didn't work in the past, therefore they'll sell. The market is trying to, the bulls want to break above this high right here. And what do I think? I mean, let me back up. I think this is a trading range. So I think there's sellers somewhere up here. Tight enough channel, spike, pull back channel, maybe 3 pushes up. But overall, I think we're in a trading range. You can see here is another, I'll just make this kind of thicker just to really explain it. We broke below this low here, so here's a gap. The market tested this gap, sold off, tested it again, sold off, and now it's testing it again. So this is some kind of, it's resistance. And I'm sure if we zoom out a little bit, we'll see that this is even resistance. But overall, I think the market's going to go sideways. And I talked about it on the daily chart, but what I'm uncertain of is how much higher we go. Even if we do go higher, let me go back to the daily chart for a moment. My thought is I think we'll have to pull back here soon. So I do not think tomorrow is going to be another big bull bar closing on its high. I think today will be disappointing. This was a good day for the bulls, but just look at the 5-minute chart. So here's the 5-minute, and you can see that what a strong trend day we had. If you look at this day, you're thinking, well, yeah, it's just 2 legs up. Leg 1, deep pullback. Leg 2. But if you look, in 22 bars, the range basically was filled. I know the market went above 181, 1 or 2 ticks above bar 23, but overall the range was filled fairly quickly in the day, and the rest of the day went sideways. So therefore, 60-something bars went sideways. Really 59, 58 bars, but either way. So overall on the 5-minute chart, a few interesting things happened. One was I said on the daily chart that, I'll go back one more time because I do want to point this out. I said that I thought there'd be sellers above. I thought there were sellers above this bar, and if the market came back to this high, those sellers would buy back shorts, and the bulls know that, so they would buy. I did not think that the market was going to get back to this high today, but I thought it would try to and maybe go halfway down, which I guess halfway is the high, basically the midpoint of this bar. But I didn't think it would get there just really quickly on the open. Turns out on bar 1, the market did get there. So here is, I'm going to move this. Well, let me get rid of some things. One moment. Okay, so here is the high of that prior day. So bear with me. Here, this high is this high right here. And you can see on the open, the market opened up, sold off, and immediately rallied. So if you were aware of that, this is a support level. Traders sold above this high here, and it broke to the upside, and the market gapped down, and traders are going to take profits here. Now back to 5-minute chart, or at least today's session. So you can see the market tested that high, found buyers. Tail on bar 1, so probably more of a trading range open. And you can see the opening price was 72 even, the high was 72 even. Typically when that happens, that will not be the extreme of the day. And I know you can argue that it's sample data, so you'd have to check the CME, which is probably true. But regardless, look back on several days and you will notice that usually the market, just find a day where the opening price is the high or low of the day. You almost will never find a day. You might find one day out of maybe a year, probably less than that. So it'll be very difficult to find just by hand. So I think we're going above bar 1. I didn't realize that at the time, or I guess I didn't think about it at the time, but that is something, kind of a little fun thing to know. So bulls tried to buy the low of bar 1 and bar 2. It's an inside bar, so it is for the bears, it's a bear breakout pullback short. Bears will sell above. For the bulls, it's a double bottom test of this high over here, and it's a failed breakout. So it's a breakout pullback buy for the bulls, but strong enough gap down, probably more sideways than straight up. Surprise bar. This is part of my problem of trading the first couple bars of the day. If you think about it, the range of bar 1 and 2 is small. You know it's going to double. Therefore, in general, you've got a 50-50 shot at the market getting a measured move up, 50-50 shot of getting a measured move down. So it's a breakout mode situation. Therefore, if you're trading the open, it's really the first two bars ideally can be better for stop entries. It's still low probability, but the point is, if you're selling here, it's so easy to get trapped, and these moves can often happen very quick. This bar went up really fast. So if you sold and then you sold here, you can take a very quick loss, and you can lose a lot very, very quickly. So that's why I suggest most people are better off waiting for 6 to 12 bars on the open. Bar 3, it's probably buy the close. You don't know what the follow through is going to look like. However, enough traders are trapped. Traders will buy this close. They'll scale in lower. But again, this bar is big enough that we might find more hesitation. And you're typically better off buying on a stop or trying to buy a pullback. And the reason you want to buy on a stop is just in case the market goes straight up, you get stopped into the trade, or in other words, you at least get filled and you're in the trade. But if it goes down, you can buy a pullback. And there you go. There's the first bar. So you can see what happened here. Traders bought this close. They bought more lower, or they just bought more lower, and they're getting out break even, maybe above the bar. Bears, they sold this high and maybe sold the close. That happens pretty common, where this right here. Traders sell the high of this bar. They sell the close of this bar. They're so disappointed, they get out break even. And you can see the market allowed them to get out break even. But that's really, really difficult to do. And I wouldn't suggest that. But if you know that, that might be a good limit order buy. So if you can think through, okay, here is bear sell here, they sell more here, they're break even somewhere down here. Maybe I'll buy at 39.80, and then you can scalp out for 5 points. And interestingly enough, price went up 10 points. Exactly. The other issue the bulls have is this is probably resistance. Traders, in theory, bought the low of bar 80, bought more lower. They're going to be disappointed. They're not going to buy the 80 low again. They're probably going to sell the 80 low, which means there's probably bears up here selling for a scalp, and there's probably bulls selling out of longs. High 1 buy, inside bar, probably going a little bit higher, but why did bar 4 have bad follow through? Bull bar closing below its midpoint, testing the 81 low, probably seller somewhere up here. Possible wedge, 1 pullback 2. Well, possible wedge, bar 1, and then bar 3, and then bar 6. However, bar 3 is strong enough that probably reset the count and the market's going higher. However, the one thing traders will pay attention to is, I think more traders are interested in buying a pullback, maybe the 4 low, the 5 low. I don't know how many traders are thrilled to just buy the close. So it's bar 6, buy the close. You can, but probably better if you are buying the close to trade small and scaling lower. And that's why. So bar 7, big bear bar. And you can see, let me redraw that, the market tested 50%. So a trader that was patient through here and just tried to buy 50% of the range quickly got filled. And you can see they made a quick profit. And that is typically the better trade. And the reason it's a better trade is that usually the market will go sideways. So high 1 buy, but sellers above. It's testing the high of bar 7. So traders bought the close of bar, it's testing the close of bar 6. Traders bought the close of bar 6. They bought more during bar 7. Other traders bought the low of bar 6 and bought more during bar 7. They're getting out back at the 9 high, or 9, somewhere on bar 9, bar 8 or bar 9. Bad follow through on bar 9, expected. A lot of overlap on bar 8. The bar is big, so typically you don't want to buy above a big bull bar like bar 8. The other issue the bulls have is bar 7 is fairly damaging to the bulls. It's kind of like this down here, bar 1 and bar 2, 3 and 4. You really don't want to see bar 5 do that. That really hinders the bulls and increases the odds of more sideways. While the odds favor the bulls and higher prices, when you get bar 7, it makes a lot of traders nervous. if you think about it, most of the time you're better off buying a pullback. And that is why a lot of people start to scalp more. Yes, it's always in long at the close of bar 3, but when they see that bar and they see the bad follow through on 4, traders they start to scalp for the simple fact that they know they can take profits somewhere up here and probably buy lower. And that drastically improves their risk reward. If you're buying a 50% pullback of bar 7, you basically have a 1-to-1 risk reward. So you buy 50% pullback somewhere down here, your stop's here, target's up here. That's much better math. And your actual risk was tiny. If you're buying the close of bar 6, that's your actual risk, the low of bar 7, and that is your target. And you can see it tried to get up there and turn down, and it eventually got there. But it is typically better off. You're typically better off trying to buy 50% pullback. You will miss the move sometimes, but you will not always. Most of the time, the market will let you in on a pullback. But I'll talk more about that later. Again, I know people cannot see the bar counter that well, so let me see if I can adjust this better. Let's see, hopefully that is easier to see. Let's see. Okay, that's better. So you can see the bar numbering easier. Bar 10, surprise bar. Probably going higher. Possible wedge, 1, 2, 3, or 1, 2 with bar 6, and then 3 with bar 10. Another big bull bar, but what will the follow through look like? For the the bears, they want a second leg trap. So leg 1 to bar 6, pull back leg 2 to bar 10, and a test of yesterday's high. I do think we're going above. At this point, I do think we're going to get to the high of yesterday, and I think we're going to trigger it. It's a reasonable buy above, therefore, I do think we're going to it, especially at this point. However, I'm suspicious of buying the close of bar 10 because the follow through may be bad, and you can see it was. So now the bulls have a wedge. 1, pullback, 2, pullback, 3, and a big bear bar closing on its low. For the bears, they see a lower high, major trend reversal, a test of 4,000, the big round number. And some bears will get out below it. For the always in bulls, do they exit below bar 11? They probably do. It's a really tough call because 10 is enough of a surprise that you may get a second leg up, but 11 is very disappointing follow through. So for most traders, they're better off getting out below 11 and high 1 buy. So for the always in bears that got out below 11, they buy again above bar 12. And there you go. So still always in long. Probably sellers up here. Typically when you trigger, this is a target for the bulls. This is a credible stop entry on the daily chart. But often on higher time frame support, the market will trigger and turn down a little bit. So another bull bar, 3 consecutive bull bars, probably going higher, strong enough for a second leg up. The bulls have a very small measuring gap here from the 6 close to the 11 close. So that increases the odds of a little bit higher prices. Bar 14, probably by the close, but again, the new high of the day with yesterday's high. Yesterday was fairly climactic, so again, maybe 75% chance of a trading range open. And then bar 15, still by the close, still going higher, but the bodies are getting smaller. At least they are now. And tails, so probably better look to buy a pullback. And there's the doji. And bull spot below, bar 16 for a scalp. What about bar 17? Will traders buy above? They can. I mean, it is a bull trend and a trend from the open, but hard to do. Still going higher, bar 18, 19, still by the close, 3 bars up, getting fairly climactic, buy climax, sideways, another buy climax, sideways, buy climax, 2 bars sideways, another buy climax. So, it is becoming parabolic and unsustainable. So probably at this point, better to look to buy a pullback. We may test the bar 16 high, maybe the bar 18 close. So I'd look to buy a pullback. I wouldn't be interested in buying up here around bar 20. High one buy, but again, high one buy here. That was successful. At some point, one of these high one buys is not going to work. So we had a high one buy here, high one buy here. What's the probability that we get a third high one buy that works? It becomes less. Typically in a trend, the pullbacks become deeper, not stronger. Now micro double top, up, down, up, down. A lot of bears, reasonable for bulls to just start exiting. Some traders that bought this high, if they're quick, will look to get out on the 23 close or the 23 test of the bar 21 high. And there you go. So micro wedge, 20, 22, and 23. Might be more sellers up here than buyers. It's still a tight enough channel that the first reversal down is going to fail, but the reversal down could be pretty deep. It could test 4,015. It could test the bar 17 high. It could test the 18 close. More traders want to buy lower, which means you will have bears selling up here, scaling into shorts. Give up bar on bar 24, probably going a little bit lower, but again, I don't think it's worth it looking to sell. Better to look to buy, but if you are buying, you need a wide stop. High one buy. You can also call it a double bottom with bar 21. Bull bar closing on its high, but this may just be a retest of the 23 low. So not an ideal place to buy above, even though it's bull bar closing on its high. You may get a small second leg down and a little bit lower. Outside down, so the bulls tested the highs, tested the 21 high, and turned down. Strong enough surprise, you may get a small second leg down, but you're at the target, 16 high, and the midpoint here. So I think there's going to be more buyers down here. We may get back to the moving average, may get to the 72 high yesterday, but again, probably not much lower. Strong enough breakout for a small second leg down. Is it always in short? I don't think so. The problem here is it's okay to get out of shorts for the second leg down, but I would not sell yet. Bad follow through, 26. Traders sold the close of 26, scalped out on 27. A doji, but not a bull bar either. Strong enough bear bar. There might be sellers somewhere up here. Bull spot here, scaled in lower. They might be disappointed trying to get out break even here. And then the market failed to break above 27, turned down. So a bear bar, but closed above the moving average. Probably buyers below. And good bull bar closing on its high, micro double bottom with 27 and 29. So some bulls will buy above, but again, this is pretty climactic. Parabolic wedge, 1, 2, 3. There's several ways to draw the wedge. And the bears may get a lower high and a second leg down. There's still this gap here that the bears have open and the bulls need to close. Possible low 2, so low 1, low 2, and huge surprise bar. It was a report. You can see it's testing the 11 low. Bears sold here, scaled and higher. This bar is strong enough that you're probably going lower. It's always in short, but if you are selling the close, the stop's far, and it is possible it could be a second leg trap. Now, what are the real odds that even if you get a bar that closes up here, it's going to reverse the trend? It's probably pretty small. I mean, the reality is a lot of bulls are trapped, and they're going to use any bounce to exit. Therefore, it's probably sell to close, stop up here, and going lower. The other thing I forgot to mention, and let me point this out as well, because I talked about it, was the midpoint of the day is really important. And the reason it's important is the daily chart. So, let me give you a day. So yesterday, being September the 7th, was a strong bull bar, and my assumption was today was going to be disappointing for the bulls. Therefore, I thought that the market would either close at the open of the day or slightly below it. And even if today was a strong bull day, I thought the market would close around the midpoint, which is this line right here. So this is a sell vacuum test of the midpoint. Some bulls will buy this close and buy all the way down, betting that they can at least avoid a loss or the market will test the midpoint. But that is institutions doing that, not an ideal thing to do. So always in short, probably going lower, follow through, but tail probably not much lower. This may just be a vacuum test of the 7 low open of the day. Another bear bar, so micro double bottom, tested the open of the day, found buyers. Another bear bar, inside bar, might be a 1 bar final flag triangle. And here, bears closed above the midpoint, failed breakout below the open of the day, tested the bar too high, finding buyers. So at this point, the risk is really big for the bears, and the market may have a really deep pullback. For the bulls, they see a second leg trap, so leg 1, pullback, leg 2, and this is the midpoint. Bulls bought here, they might buy more lower, maybe at the open of the day. Therefore, the midpoint, 85 area, is a break-even price, which means the market may find resistance up there, and it might also find resistance up here. So the market may have to test not 39.85 and the midpoint of the day. Typically, in a trading range day, the pullbacks are disappointing, and the reason for that is scale-in traders usually can avoid a loss. Traders that bought this close bought more lower, probably will go back up to here. And while it doesn't seem likely, it's possible that the market tests the 27 low, because bulls bought this low, scaled in lower. Therefore, we may stall if we get up here. But at this moment, I don't think we're going up there yet. A bull bar, you can call it a micro double bottom, small head and shoulders pattern, left shoulder, head, right shoulder, but again, probably sellers above and at least a small second leg down. But you're at support in a trading range, and you have to wonder if this is just a sell vacuum test of support. Good bull bar, closed above all these bars over here, fairly damaging to the bear case, increases the odds of more sideways. Another bull bar, testing the midpoint of the day. So again, probably sellers up here, not going much higher. Strong enough rally, traders may try and buy 50% pullback. Give up bar, testing the 4,000 round number and the midpoint of the day. Strong enough breakout, always in long, and may have to test the bar 27 low before we pull back. So probably buy the close strongly above the moving average, good for the bulls, but you need the wide stop. Traders will buy the close, betting on a second leg up. And you have bears that are trapped. So bears, for one, they got trapped here. And some of those bears sold here. Maybe the high of this bar, the high of this bar. So they may scale in, trying to avoid a loss. But this is really good for the bulls. And sellers above bar 40. Traders bought the close, scaled in lower. They bought the 40 close. Probably sellers above, high one buy. But also, 39 is a strong enough rally that the odds favor a second leg, which is in part this. Invert, it's a second interest short on a smaller time frame, but micro channel, probably buyers not far below. May have to test the 38 low before we find buyers though. Some bears sold the midpoint here, scaled in higher, so we may have to test the midpoint, which we tested both of those and went below it. Probably buyers somewhere down here. Bulls buying the 40 low, 41 low, 42 low, even scaling in lower. Better, instead of buying the 42 low, typically better to try and buy the midpoint of this bar or down here. Some traders that bought here, they'll probably buy lower. And you can see, second entry buy. High 1, high 2. Traders will buy above, stop down here or down here. Very big surprise bar. But again, we've had a lot of vacuum tests today. Sell vacuum test the open of the day. Buy vacuum test at 4,000, the midpoint. So while this is a strong breakout, look to the left. Sell vacuum, 2 legs up, buy vacuum. We're pausing right at resistance. Bulls bought here. They got trapped on the way down. What are they going to do here? Well, if you bought here and you scaled and lowered, are you happy that price is back to here? Of course you are. So this may be more of a buy vacuum test of resistance now than support. And the reason I say that is bulls tried to buy this area, they got trapped, therefore this will be resistance. Doji bar, so hesitation, still probably going a little bit higher, not a good area to short yet, but the market may have to test the 41 high before it goes much higher. You'll have some bulls that bought the 42 close, disappointed with some bulls bought the 45 close, disappointed 46. They'll use 47 to try and get out break even. Another bull bar, so probably second leg up, going at least a little higher. And then big outside bar, doji bar, disappointment, bulls bought the close, scalping out, traders sold this close, scaling higher, getting out. Probably going to go sideways here. Some bulls trying to buy down here. And you can see price tested yesterday's high, tested around the midpoint, and the market turned up. So 3 pushes up, 1, 2, 3. It's also an expanding triangle, down, up, down, up. So 2 pushes down, 3 pushes up. Probably sellers up here, and may test 4,000, may test down here, but probably not going much higher. We test the 30 high and found sellers. So again, probably not going a lot higher. And there you go. So now the market formed a wedge, 1, 2, 3, forming a lower high and a second leg down. So 2 legs down after the wedge, 1, 2, 3. And there's the first leg, pull back, second leg. Big bear bar, tested 4,000, tested the 41 high. Bears made money selling this high and scaling in. Probably not going much higher, probably not going much lower. You know, and if you think about it, 2 important prices, the 23rd and the midpoint of the day, which is this blue line here. So here's this price, here's where we are right in the middle. What that makes me think is there's still a few hours left in the day. The market's deciding on closing down here or testing up here. Bull bar, but again, 54, big bear bar, so probably sellers above. 55, close on high, but forcing you to buy in the top portion of a trading range, the tight trading range over the past 6, 7, 8 bars. Not an ideal place to buy. And outside down, basically, probably, and bear sold the 54 high, scaled and higher. So again, not ideal. Inside bar, you can call it an IOI, second entry short, really doesn't matter. Forcing you to sell at the moving average and into this gap. There's an obvious gap here, and let me do it like this. So here's a gap, and here we go. Yeah, it's actually already had it filled out. So at this moment, here is the size of this gap. It's very big. Close of this bar to the close of this bar, and the market's probably going to test this gap and close it more. But right now you have a line chart. If you look at a line chart, here's this gap. It's pretty big, pretty open, so there might be buyers somewhere down here, which means selling below this bar may not be ideal. Outside up, but tight trading range. Triangle, 1, 2, 3, 1, 2, 3. It doesn't matter that this bar went far below the triangle. You can call it 1, 2, 3, and then 1, 2, 3. It's tight trading range and breaking out to the upside. But again, I think we're going to have a hard time escaping the midpoint of this high and the midpoint of the day, which makes me think this breakout may fail and go more sideways. This is damaging to the bull case. So might be more sellers up here. Bull bar, 61, but bad follow through, 62. It's a bull bar, so it's minimum follow through on 62. But the bulls really should have gotten another big bull bar like this, or this. And there you go, bear bar. So bears unable to escape the magnetic pull of the midpoint of the day. The 4,000 big round number, as well as this magenta line, which is yesterday's high. That's also important because the bulls want to close above yesterday's high. The bears want to close below it, which if they close below it, that would be a sign of weakness by the bulls and a sign of strength by the bears. Obviously, the bulls closed far above it. Consecutive bear bars, but unable to close below the 63 low and big tail 63, big tail 64. Probably buyers below, but may have to get all the way down to here or test the 4,000 big round number. And it's still possible that we get down to the midpoint of the day here. Double bottom, you can call it an expanding triangle. 1, 2, 3, 1, 2, 3, really doesn't matter. Tail on top, micro channel since here, so 1, 2, 3, 4 bar micro channel, might be more sellers above. Not really a good buy, forcing you to buy in the middle of the range. And a big tail on top. You can also call it a wedge bottom on a small time frame. 1, 2, 3. So it's an okay buy for a swing, but I would not. This is a trading range day, and I think we're in the middle of important resistance and support. Resistance, high of the day, support, midpoint of the day. And now you have a 6 bar micro channel, inside bar. So again, probably buyers down here. The market's trying to keep this gap open, and it's trying really hard to do so. Doji bar, bear breakout that failed to close below the 54 low or close the gap. So it's another test of the gap. The expanding triangle is getting bigger, so might be more buyers down here than sellers. And outside up bar, low 1, bull body, so it's a breakout pullback short, but 68 being a bull bar, even though it's a doji, increase the odds of buyers below. And again, testing into this gap. Give up bar, probably by the bears. The bears had multiple chances to close this gap, and they're not doing it, so it's an okay buy, but again, forcing you to buy in the middle of the range. But some traders will buy above 69. What did the bears do? Well, close at the moving average, and if you look at the moving average, this blue line, it's relatively flat, which makes me think that the market's going more sideways than a lot up or a lot down. Follow through, bar 70, open, small micro gap, 68 high and the 70 low, so that's good for the bulls. But again, why is 70 a small bar compared to 69? This makes me think this is just some sort of test of the midpoint. 71, good bull bar, but again, might just be a test of the 62 low and test of the upper portion of the trading range. Big down, big up, big confusion, might go more sideways here. Bear bar, inside bar, so it's a micro channel, might be buyers below, but it's also a low 2 short. Low 1 was 68, low 2 was 72. Outside down, bulls bought the close of 71, disappointed 72, getting out break even. During 73 as it went up and tested this close here. Bears, they sold the 68 high and more higher, so the market's probably going to fill this gap here. Bulls might buy this gap, betting on a second leg. And you can see that's what happened. Bulls bought as the market tested 68. Bears sold. Well, excuse me, let me back up. Bulls bought as the market tested 68 high. Bears bought back shorts as the market tested 68 high on 74. But it bounced enough for a scalp and the market continued lower. So give up bar. Again, testing 4,000, testing the 68 low. The bears are trying really hard to close this gap here. Bull inside bar, but close below the midpoint. Again, this is just a mess, and it's really easy to lose money here, so better not to do anything. And there's a give up bar. So give up bar, testing the highs, but a very big expanding triangle. Here, 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 and here. So might find more sellers up here. Good bull bar, but 77, only a few days left. Only a few bars left in the day's range. Probably better to wait for tomorrow. Follow through. The bulls, the bears are giving up, and the market may test today's high and close on its high. But again, I think it's hard to justify buying up here with only a few bars left in the day's range, and the risk is big. So you have bad risk reward because you're probably not going to get a measured move. If you buy the 77 close, 78 close, stop down here, or even at the midpoint, you're probably only going to get 1 times your risk at best, and that is not high enough probability. So most traders should be flat. And there was the rally into the close. So good day for the bulls. And see if I want to mention anything else. Tomorrow's Friday, so I'll talk about that for a second. And the bulls have done a good job reversing here. Some bulls bought the low of this bar. 3 bear bars down, so probably sellers somewhere above and limited upside. But right now I see big up, big down, probably going sideways. Good bar for the bulls. So tomorrow the bulls are going to try and keep this bar. The bulls want the week to close on its high. Therefore, right now the bar is on its high. So if the bulls can keep the market at this price, that means that they will get a bar that closes on its high. The problem the bulls have is they've got to keep this price level the same in order to close on its high, which means they've got a whole nother day's worth of price action to do that. And on the daily chart, the bulls might be a little bit exhausted. This is good for the bulls. However, my only concern is when I look at this, I think it's going to be hard for the bulls to get a third bull bar in a row closing on its high. They might be able to. They got 3 bars here, 3 bars here. But, again, I think it's possible the market gaps up, but I think it's going to be hard to get the weekly chart to close on its high. I expect something to be wrong with the bull case here. But we will see. Hope you enjoyed this video and have a good evening.